Hey, it's Jack from Alpha Charts with a state of the market video. Today is August 5th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Okay, thank you for watching today. If you haven't liked and subscribed to my YouTube channel, please click subscribe. I really do appreciate it. It helps me out, keeps me making these videos for everybody and keeps them free for everybody. Let me talk about my subscription with Twitter real fast. I do this every week at AlphaCharts365. You can just follow me there if you want to. That'd be great. I would appreciate that. If you really like my content, it's $10 a month, and I offer a subscription service. It's an educational service. The goal is keeping you on the right side of the market and the best names possible. I'm gonna give you a quick example of that. So I do market notes twice a week, Sundays and Thursdays, right? I do midweek videos. I do Sunday special videos. I do watch lists, focus lists. I do put out a crap ton of content for $10 a month. Literally, that's less than a Chipotle meal. So the value is especially there. I want to show you, like, this was my market note from 727, right? So this was and you see I put out a very detailed market note. I'm not going to stop here. But I want to go to the bottom. This is the part here. We were talking about that the market's always going to be here for us and that we don't need to have full positions on. We were talking about that there's signs that there could be trouble brewing, right? And to take the foot off the gas. We were talking about paying ourselves to keep the profits that we made in the market, right, from June and July. So we had two really great months in the market. We pushed hard on the gas, me and my subscribers. And this is the kind of content that I help. Again, I don't trade for anybody. That's your choice alone, but I help to guide and kind of like a co-pilot is the way I think of myself for you for, again, really a tiny amount of money per month. It's at Alpha Charts 365. I think the value is absolutely there. The content is there. We again took the foot off the gas at the right time. We pushed on the gas at the right time, and that is really the best thing that I can offer. So, as well as amazing ideas when it's time to push on the gas again. Again, Alpha Charts 365, click on the subscribe. And again, I think there's a ton of value for a very small price. We're not trying to fleece anybody. We're just trying to just help everybody, right? I mean, everybody can afford this for $10 a month. Anyway, give it a try on Twitter. Thank you. Let's get into the charts. S&P, rough week this week. No doubt, rough week this week. We came back and Friday tried to have a little bit of a rally and it fizzled. And we have a very important area, I think, 4460-ish. That's an important area. And that's what we're watching, right? On the week, it's a heavy red bar, down week. Let's let this charts load on the weekly. There you go, down 2.27 on the week. So that was not fun. If you're in growth names, it hurts even more, right? Because if this is down 2.27, growth names are probably 3 times that, right? Probably 6 to 10%. 3 to 5%, 3 to 5 times, I should say. So that's a big deal. And it made a lower high here. That's a big deal as well. So that's nasty. Looking at the RSP on the weekly, if S&P was down 2.27, we were only down 1.98. So listen, that's close enough to be about the same. And we still, again, this was an area that we've been intently watching, and it did not break out. It tried to, it reversed, and it just fell apart from there. I think that we have our line in the sand now. We're below this area, and things, are rougher on the RSP and not looking fantastic. Going to the Qs, again, very similar, lower highs. You can see them right here, very clear. We had the inflection point, try to break out, kind of came back down. I know these charts are slow to load. It's got to be my internet or trading view. I don't know. There we go. So there we go. Try to break out. Could not. Really couldn't get to all-time highs. We have the lower highs here, especially compared to this area. And now we have this 366 area. On the Qs, that's a big deal. Let's go to this area, and we are, come on the weekly. There we go. Down 3% on the week. Obviously, we had some major earnings this week that did not help anything. Apple was down big time, but this is a big deal, right? It's down 3%. But again, 366, that's what I'm looking for. And at the equal weight, Qs were down 3, equal weights were down about 3 as well. So about even again. So this area was super important, right? Let's go back daily here on the Qs. I'm going kind of fast today, but I think you guys have been through this with me so many times that you guys get it, right? So this $79, $80 level, that's a big deal. This was a huge deal. We failed at the $79, $80 level right here, right? Again, these charts are just super slow. Yeah, right there they are, right? We failed here, came back. There's your 50-day. That's a good spot that, we will see what happens when things get there. But really, you know what? The scene of the crime is a $74 level, right? That is a place where it's going to be really interesting if the rubber meets the road, what happens there. But right now on the equal weight, just, a pullback. That's it. There's nothing more to say about that. IWM. So on IWM, we were in a range. We were at the top of the range. We said 200 was the area that was important. We made high, lower high, lower high. We said that was significant. We got just about to that 200, close enough for me, 199 and change, right? What was the high? High was 198.75. That's fine. We said it was a widening pattern. Like we were talking about this, right, on this video. And things are just falling apart as we speak. On the week, they were down. Let's see how they were down compared to some of the other stuff. Qs were down the most so far at 3%. S&P was down 2.27, and IWM only down 1.15. Outperformance, right? That's what we would call that. And some people would point to that. I don't like things going down at all. Personally, I don't like to lose money, but still it is outperformance. And you know what? We'll be watching this. If we can see continued, if it recovers first, let's put it that way, that would be our bullish sign, right? So what are we looking for bullish signs? IWM recovering first and taking out 200-ish and taking out this green boxy area. That's the bullish sign that I'm looking, one of them at least, that I'm looking for. Mid caps, they were also at inflection. I think it was at 500. And I think they failed miserably at that 500 level. They did almost perfectly, and they are falling behind. Now, listen, mid caps were actually up on Friday. That's a positive, right? Let's look at what could be positive. Maybe this is not as deep of a pullback as some are calling for, right? I like that the mid caps closed green on Friday, and on the week, let's see, the small caps were down just over 1%, and the mid caps were down about the same. Again, this 500-ish area remains to be very, very, very important on the mid caps, but holding up better than most, and so that's a positive. Let's get into the ETFs. XLF. What do financials do? Again, failed miserably here, but overall, they're above their 23-day, and we're going to get the cross here probably before it takes it out. And so this $34 now becomes a very important area, right? On the week, they were down, let's see, just to compare the weeklies, 0.82, again, less than most. So we will see how that all shakes out, but not terrible. Now, SMH. This is the one that I am really, really, really watching, because we have trying to get to it did get to all-time highs over here, right? And just lost them, completely lost them. And that's never good. Here's your 50-day. And the 50-day was coming up pretty close. We had a rising wedgie look to this here. This wasn't really a healthy ascent, right? And so now it needs to build it out. Now, do we know if it's going to touch the 50, if it's going to touch the 200, or someplace in between? Listen, we have no idea what the future is going to bring. And anybody that pretends like they do is lying to you. I mean, straight up, nobody. So if they can see the future, please sign me up for their subscription service, because I like to know that, right? But I do know we're underneath the VWAP from this gappy area right there. I do know we're underneath all these highs right over here. And I do know the 50-day is literally right below it. Now, positive, it also closed up 0.04. That's a positive, right? 50-day, that's the first inflection point. We're right there. But we don't know what's going to happen here. And there's a good chance it's going to take it out. I think the 200 visit to that 200 or maybe even 130 is possible. We'll see. But you know how I feel about SMH, one of the most important subsectors out there by far. And so if SMH is doing well, I think the market's doing well. If SMH is pulling back, I think the market's pulling back, right? In general. Now, there's places in the market right now that are doing okay. And again, I talk about that in my stocks to watch, which will be out tomorrow for everybody. And I really go in depth and go with my subscribers, right? We talk about the best of the best. And I do that on Sunday for them, separate private video. But down 3.89 on the week, obviously hard performance on the week. And SMH is hurting right now. I'm sure Nvidia, let's see what Nvidia did, because they're the big boy in SMH. And so whatever Nvidia did, chances are Nvidia was up. That's interesting, right? So people are still buying the dip on Nvidia. And on the week, with the SMH down 3.89, we had Nvidia down probably less, I would think. No, 4.43, a little bit more. Look at that. And then let's look at the equal weighted semiconductors on the weekly too. Equal weighted was down 3.4. They did a little bit better. Nvidia definitely caused the cap weighted SMH to be down more than the equal weighted because it's such a big weighting, obviously. And again, it doesn't look terrible sitting right on the 50-day, but underneath the shorter term moving averages, mixed messages, right? Again, this is equal weighted SMH, or equal weighted semiconductors, I should say. And I'm gonna get rid of this. There's a little bit too much for my liking there. We'll see. Right now it's just kind of sitting on a retest, and what it does here will be important, right? That will give us a lot of information, right? You can't really make a decision right now because of the mixed signals. Let's keep going. What did transports do? I guess they had a rising wedge look as well. We talked about a lot of rising wedges. And again, you could kind of see it right in here. That's a rising wedge. And I think I drew it in as soon as all my drawings decide to show up. I don't know if I should blame Xfinity or TradingView on this one. There's a rising wedge and kablooey, right? Now, where are we watching? This $82 area, right? That's about where the 50-day is as well. You know, coming back and tagging the 50-day could just be normal price action within the context of a bull market. Let's not get like completely overly bearish, but we shouldn't be a blind bull either. So that's an area we're watching. Transports tagging the 50-day and seeing what happens there. I think they're likely to tag that 50-day moving average. Let's look at housing, ITB. And there's ITB with a little bit of the rollover with the market, but nice green close on Friday, right? Let's put positive where positive is. You know, so we have the indexes rolling over, but then we have some of the subsectors not doing quite as bad. Again, if housing comes back and tags the 50-day at 83, is that the end of the world, or is that just normal price action like it did over here, right? Like it did in here, right? Like, you know, as it recovered and 50-day turned up, right? And we can see the positive every time it tags the 50-day. So don't get too bearish, but don't overstay your welcome as well. Let's look at XHB because it gives a little bit more. That's ITB is pure home construction. XHB gives you a lot of the things that support home construction as well as the builders, and you see not nearly as strong. Talk about consumers or whatever, could not get to all-time highs. So lower high here. Also, this rising wedge look, which was drawn in, and again, we'll see. Maybe comes back, tags the 50-day. Maybe comes back and gets lower than that. Remains to be seen, right? All right, so indexes rolling over. We have the sectors not looking quite as bad, but still in a pullback mode. Let's go to the internals now and shut off some of this stuff and see what the internals. First off, the VIX. We talked about the VIX being in a bullish range and being very low, but we also talked about being a rubber band and being pulled back and waiting for the snapback. We're getting the snap back now. Now it's at 17, which is not crazy, but it's just saying more volatility is expected over the next 30 days. That's fine. Back in this cautionary area, that's fine. That's expected, right? This is what a normal VIX should be doing. If it continues and we get into this green and reddish area, that would be a contrarian type signal of maybe, the pullback is getting long in the tooth and we may get some kind of relief rally or bottom, right? But right now we're not there yet. So VIX is doing what they're supposed to be doing. Looking at credit spreads. So credit spreads aren't spiking as much as I thought they could be at this point. That's a positive too, right? So VIX is spiking. Credit is still not, it's moving higher, but nothing crazy, right? That's a positive. And when we look at the weekly, again, when you look at weekly charts, you can't expect it like this week it's going to happen. We don't know when exactly it's going to happen, but you see it's within a consolidation. And again, from my work, you see how it goes up, consolidates, and then usually there's a breakout and there's a finish higher. And it has done that repeatedly over and over again. We don't know if that's going to happen again or not. If I go back even further from the beginning of this chart, we see it again multiple times over the decades. Again, I say decades because these aren't like flimsy charts. And you can see like right here, it kind of didn't, just continued lower, right? So that didn't happen right there. So we can say that this is the one-off. No indicator, no chart is 100%. These are just, okay, if 4 out of 5 times it did it, it did it, right? That's 80%. That's pretty good odds. Now, again, small sample size, take it for what it is, but we are not seeing credit spike yet. That is the positive, right? If we start seeing credit spiking, that is the negative. Let's see, put call ratio. People are starting to get a little bit more bearish, but seriously, not like crazy bearish. I did a poll on Twitter, and most people think we're just in a choppy range. And then the other next bull market, and about 9% of the people, this was 700 or so respondents, 9% of the people believe that we're in a bear market. So that tells me that we may be, again, that's a sentiment indicator. This is a sentiment indicator. I think we may have some more room to go. If we get to this orange zone, that would be time to go long. That's a contrarian indicator. That's how we use this, only at extremes. We're not there yet. Percent of stocks above the 50-day moving average. It's a breadth indicator. You see we are pulling back. We're still above 50%. We talked about getting up into this frothy area. Didn't even quite get as frothy as I thought it could get. I thought we may get one more spike higher, to be honest, to get into the red zone. Red zone I drew in there. So it's arbitrary, right? It's 80%. It's a place where I could tell you many times in the past, we get there and we pull back. But as you can see, sometimes we don't get there. Sometimes we don't get there and we pull back. And we don't know where that pullback is going to be. We don't know if it's going to be a shallower pullback or if it's going to be more extreme. Now, I can tell you, it seems like if it gets to 80%, it's a more extreme pullback. And it seems like if it's shallower, it's less extreme. We don't get back all the way down to the green. But again, I don't know what's going to happen. But I do know that breadth is deteriorating as expected. Let's look at the dollar. I think the dollar is very important. I've talked about this for a long time. Okay, so it's pulling back just a little bit. That's good. Down to 102. There's a trend line. Again, we're on a daily chart right now. There's the trend line. There's your whoops, right? This is when we were like, uh-oh, right? When we saw the whoops. Let's just see if I can get this chart nice for you guys. There we go. That's good. And here's a trend line. So we try to break out. We couldn't. We're back underneath it. And so we're watching this. I'm watching this very intently. Dollar starts to come back down, test 100 or 101. That's a good thing. And I think equities will do well in that environment. If we continue higher and come up to 103.50, that's going to be a problem. If we break above 103.50, that's a big problem, right? And so again, we don't know which way it's going to turn, but dollar index, DXY, very, very important here. 10-year yield. And let's try to not push wrong buttons on the charts. 10-year yield came back big time on. Look at this. First time I'm looking at this chart today, down 3%. That's a positive. And it's funny, we talked about this with my subscribers on Thursday night. About we were at the inflection point, and chances are we'd see a pullback, and we did. It doesn't mean we're out of the woods yet. This looks more like a bottom than a top, and it's making higher highs and higher lows. And so again, we're watching this to see what it does, right? Does it break out or does it fall apart? Falls apart, bull market's on again, right? If it breaks out of here and continues higher, I've been very vocal that a breakout from here, and I think we're going to see 5%, and that'd be a much, much bearish condition. And how we get there matters as well, right? It doesn't say we're going to go a straight line up. We're going to get starts and stops along the way. So, but again, very important for this 4.2, very important area. So we're watching that closely. And let's look at the copper gold ratio. Here's copper gold ratio. And let's go back to the line chart, because I like line charts for ratio charts. And here we go. And you see it's kind of holding up fine, just in a choppy, nasty zone right there, but it has not fallen apart yet. Okay. So at the end of the day, what do we have here? We have, at the very best, a choppy market that is just pulling back to maybe the 50-day moving average, and nothing much more to see than that, right? I think that's best case scenario, is that we come back and maybe come back to this area, maybe 44.50-ish, tag or get close to the 50-day, and I'm saying it's just a normal run-of-the-mill pullback. If we start to break the 50-day, then we have levels below it to watch, including all the way down potentially to the 200-day, VWAPs, things of that nature. Right now, tons of mixed messages out there. So we don't have to be a hero. We don't have to trade every day. We could just kind of chillax and watch the market. And when things have decided directions, we can then put the wind at our back and have a greater chance of making money in the market. And that's basically what I try to do for my subscribers here at Alpha Charts 365. Keep you on the right side of the market in the best names possible. Put as many edges together in order for us to make money in this market. All right. Good luck this week. Hope you all didn't get too hurt last week. And follow me on Twitter at Alpha Charts 365. Subscribe to my YouTube channel, please, down below. Take care, guys. Bye.